Hey everybody, this is Jim at SP500chart.com. It's about 1:30 on February 17th, 2014, and we're going to do our weekly review for last week's trading and also taking into account and looking particularly at Friday's trading session as well. Before we do that, I just need to remind you that the website and this video are for educational purposes only, and nothing stated at the site or in this video is intended to be used as investment advice. I can draw lines on charts, but you have to draw your own conclusions from your own research and make investment decisions that are suitable for your personal financial situation. I am not a licensed financial professional. I'm just a guy who draws lines on charts. All that means is you trade at your own risk, and you take everything I have to say with a big old grain of salt. You can tell I'm from the South. I said big old. But anyway, let's take a look. We're starting out here on a 30-minute chart because I just want to show you a broad overview of what we've been looking at. We had something of a rising trend that got squeezed down sort of into a wedge shape. That broke down after hitting highs in the very low 1850s back in January. You could see it right here. It was January. We actually made a double top. Okay? But, and this is where things get interesting, that double top really should have given the markets a little bit of a challenge around 1815, 1816, and you can see that the S&P this past week just ignored any technical downturn at that level. Now, we did come up and sell back a bit for a day and a portion, but that had all of the earmarks of being a bull flag. Of course, that had to be confirmed, which it was. We'll take a look at that. But basically, we were in a long-term uptrend. Then we sold back in from the third week of January through the first week or first portion of February. Then we started this move back up. And we did so with another one of our strange little inverted head and shoulders patterns that's missing, for the most part, missing a right shoulder. And this is like, I think this is either number 3 or possibly even number 4 if we count some very small patterns that we've seen this happen. And I don't know why that's happening. You could say it's a sign that if you're a bear, you could say it's a sign of weakness, that it shows an anxious market. Because impatience. We're not going to wait for that dip. We're just going to pile on. Okay, a bear might say that and be able to construct a fairly convincing argument. But then a bull might look at this and say, look guys, this just shows how much buying strength. Because it's not so much, again, this would be the bull argument, it's not so much where the markets turn up that show irrational exuberance. It's how ridiculously high they get that shows irrational exuberance. So a buying on a dip that shows a quick recovery could be a sign of real underlying strength. So you could take it either way. You have to make up your minds what you think. All I do is draw lines on charts. So what happened was, as we got a little bit further into the week, when we saw this low get set here, and this is a low. It doesn't look like a low, but when we saw this little dip down here to about 1809, 1810 or so, early on Thursday, that forced me to scrap the trend lines that I had drawn for a potential rising channel and to revise those. And these green lines are that revision, and it turned out that it looks like that was the right thing to do. because we broke out over this. We showed that this was at least a short-term area of support. So now we have one, almost two here, but I wouldn't really count that. We have one, two pretty clear areas of support now in this channel. Prior to Thursday, we didn't have any second data point other than if we tried to, use this second point here on the 5th, and then maybe this little area here on the 10th. But we know that the markets like to travel, it seems, in these parallel channels. So even though that looked to be a pretty good read on things, I think this is a better one. And this is, I want to remind you, this is something that we could not have known. Nor could we, well, we could have guessed at it, but we couldn't really know it until we saw that little dip early on the day on a Thursday. So right now, to make a long story short, we've got this strange, almost right shoulderless inverted pattern here that has a target of about 1858. We are currently at 1838, so it looks to me like the S&P has about 20 more points before it makes that target. Now what's going to be interesting is, before it can get there, it's got to pass through about 1851, 1852. And that will be taking out the previous all-time high right here. So this is really starting to look kind of interesting. And again, you could say, if you're a real dyed-in-the-wool bull, you could say, guys, are we setting up resistance up here at 1851, 1850 or so? Could it be that we came up to this level, dipped down heavier, come up to it again, and then maybe have another dip, or maybe we don't have a right shoulder at all? Could this possibly be a pattern that would propel the S&P to the mid to high 1900s? And the answer to that would be stay tuned, because that is possible. But if it happens, it's got to take out some fairly interesting resistance. Okay? So if we get a pattern that looks like that's what we're going to do, then we've got to consider some areas of resistance up here and what that might mean in the longer term. So we're not there yet. I just throw that out, looking ahead, in case we end up there, because we could very well end up there. Again, this market, what it's been doing, really nothing would surprise me. So for right now, we continued the week pretty much in that sustained uptrend. The only question we had was what happened on the 12th, when it looked like maybe things were breaking down. But if you'll remember that video and the analysis that day, I mentioned that the break did not look serious. Typically when you break a trend line, you expect there to be a pretty quick and fairly obvious break of support, almost like there's a glass rod that's holding things in place. Then all of a sudden it breaks, and something fairly significant happens when that support breaks. When you just kind of slide down through it, as we did on Wednesday, that just doesn't look significant. So that was one reason why I said, let's wait, let's wait. Maybe something else is going on here. So for right now, it sort of appears that something else might be going on here. So We ended up with 2 positive days on Thursday and Friday, which is interesting because if we'd believed in that channel break, then we would, instead of finding ourselves at 1838, we would more likely be seeing ourselves testing 1800 and possibly in the high 1700s. Instead, bull flag, breakout, and now just for the past 2 days, really, just this little, almost like a melt up, like what we had back in the previous week, near pretty much all week long. So guys, interesting chart. I think the week was pretty good in general. Again, the thing that's very interesting is just the fact we did not get that right shoulder. And again, I hate to say it, but if we see this goofy pattern again, and we might see it on a larger scale, with this line right here being the neckline, but if we see that, I'm still not willing to give up on the idea of that right shoulder forming, because that is such a classic market pattern. But I want you to remember that we've been seeing these things without much of a right shoulder, and I'll try to remember to say that. But the only thing that I kind of regret was that even though we had this line at about 1800 pointed out as a potential a neckline, the one regret I had last week is that I really did not bring home the idea that maybe we're looking at another pattern without that right shoulder. So I'll try to be better about that going forward. But right now, let's see what the week gives us. Let's see how we start things off tomorrow. It's going to be a short week, four days this week. Let's see if our channel continues to hold up. If our support holds, we're not that far off from support right now. And then let's see what happens if and when we reach this line up here at about 1851-ish. See if there is enough strength to get over that line now, or if we maybe come up here, then back off a bit. And if we do, does this end up being a neckline in a fairly large inverted head and shoulders pattern that would be a continuation? So here's what we would be looking at if this is a continuation pattern. We'd be looking at left shoulder, head, possible right shoulder, or maybe another strange thing. So I think 1851, 1852 is going to be an interesting level to watch. Again, we powered up through some resistance lines without any difficulty whatsoever. We now have what appears to be a failed head and shoulders top. But I think it's worth keeping in the back of your mind that we came very close to having a head and shoulders top here. It broke down but then recovered. So let's see if we get this break over this resistance here in the very low 1850s. If so, I think we're going to head up for 1900s. So this is a line to watch that should signal a significant move ahead, setting of a new high, and in all likelihood a move to at least challenge this blue line, possibly even take it out. Now remind you, this is fairly long-term resistance. I think we could see that on a 3-day chart. It goes back a while. It goes back to these tops back in 2010 and 2011. Has not been touched since. So, it'll be interesting to see what happens in the week coming up. So there's your video, weekly review and video for Friday's trading. Really, Friday was just more of the same of Thursday, to be honest. Nothing really changed. We just went up a little more in that same little kind of a short-term channel that developed on Thursday. So guys, there's your video. Thanks so much for taking time out of your day to watch it. Thank you for your support. If you're a subscriber at sp500chart.com, if you're not, please consider it. It's not that expensive. As a matter of fact, it's pretty cheap. It's less than $1 a day on a monthly basis, or you can sign up for a year. I'm gonna do that year. I know I said a little while back that I wasn't gonna do the yearly subscription anymore, but I'm gonna keep that for a bit longer. So if you want to do that, take advantage of it. One of these days I'm going to go to just the monthly. Of course, if you set it up as a yearly subscription, as long as you keep it current, it will always renew, and you'll get that same rate. So no rate changes will be retroactive as long as you remain current. So hey guys, thanks for watching. Take care.